Hi, I'm James McGuire, and our topic today is venture capital funding, specifically something called world positive funding. To discuss that, I'm joined by James Joaquin, co-founder and managing director at Obvious Ventures, a VC firm. Hey, James, how you doing this morning?
I'm doing great. Thanks for having me on, James.
Good, good. I know, obviously, since you are the managing director of a VC firm, you are literally a venture capitalist.
I am 100% a venture capitalist. I'm past the denial stage on that.
And as a matter of fact, you are based in San Francisco, no less.
Yeah, we have the good fortune of working in the Presidio section of San Francisco, which is a former military base that's now a national park. And we're sitting by the Golden Gate Bridge in the Presidio talking to you.
That is very San Francisco. Okay.
Yeah.
So I'm wondering, obviously, probably when you were, a kid, 10, 12 years old, you didn't say to yourself, I want to be a VC. I want to be, a fireman, an astronaut, or a venture capitalist. Like, how did you come to be an actual venture capitalist? How does one become that?
Well, there are different routes. I'll tell you mine. I really started as an engineer. I studied computer science on the East Coast at a great school called Brown University. And while I was there, I started programming on the 128K, as in kilobyte Macintosh, something that, Datamation probably covered as the oldest computer magazine on the planet, right?
I owned one at the time. I think I paid like $3,000 for that 128K model. Yeah,
I used my university discount, and with 4 other Brown students, we decided to start a software startup, and we could barely spell startup. This is way before the notion of startups in Silicon Valley even really existed. Right. But we had an idea for a product, and we started programming, and I was one of the engineers. And that company, which was called Clearview Software, got acquired by Apple. And so back in 1989, I moved from the East Coast out to work for Apple in Cupertino, California. And that was the beginning of my journey, in that it was always my dream to work for Apple. And I got to first run an engineering team and then be a product manager at Apple and ship a bunch of products. And that's where I first got exposed to the idea of venture capital and this whole kind of startup culture around the personal computer that was happening here in Silicon Valley. And when the internet showed up is when I left Apple and started co-founding internet startups. And I did a series of them. The first was called when.com. It was a web-based calendar, allowed you to keep your schedule and your events on the web and share them with friends. And my co-founders and I were fortunate to basically have a bidding war of all the internet portals at that time who had just acquired web-based email, and they were looking for a web-based calendar as their next kind of application. Right. And we ended up selling the company to AOL for a large sum of money. And
I remember AOL.
And AOL, you may remember them dropping CD-ROMs out of airplanes to get you on the internet.
Yeah, that was hot. At the time, that was very hot.
Yeah, I mean, for a lot of Americans, AOL was the internet in the early days of the web.
It was. In the late 90s, I thought of AOL was the internet.
Yeah, and you were not alone. And so that was a great experience to go from, whiteboard cocktail napkin idea to launching the product. We partnered with Netscape, and then we were acquired by AOL, and ultimately served, tens of millions, if not hundreds of millions of users with that calendar. And then for me, it was bittersweet in that AOL laid off 2 of the 4 founders as part of the transaction. I was one of those 2. And so I went and helped start another internet company called OFOTO, OFOTO. And the idea that we had, and this was in the summer of 1999, is that this thing called the digital camera was going to take off and become mainstream. Now, at the time, digital cameras were $2,000 for a 2-megapixel camera. Right. And film cameras were cheap and plentiful. So most people thought we were crazy, which is in hindsight, often a really good sign as an entrepreneur if most of the market thinks you're crazy or you're too early. And so we built a service that allowed people to create online photo albums with their digital photos, share them with family, and then turn those photos into Kodak prints and photo books and cards. And I was the CEO of OFOTO, and we grew that business to be the world's largest photo service in its day, over $100 million in annual revenue. And we sold the business in 2001 to Kodak, to Eastman Kodak.
And the whole digital camera idea did end up taking off, believe it or
It
not.
sure did, yeah. And you know, the nails were still warm in the film coffin when digital cameras then got disrupted by the camera phone. So
Right.
it's a great textbook example of, you know, the pace of disruption.
So you've had a number of startups, a number of businesses you've built, and here you are. You have this philosophy. We talked about this the other night. The idea of world positive investing. It sounds wildly utopian and optimistic. I'm sure there's some skeptics about it. What is your strategy of world positive investing when it comes to investing in the firms that you help build with cash?
Well, let me tell you the why we started Obvious Ventures and what this marketing term world positive means to us. Because the last part of my entrepreneur story was that after Ophoto, I became CEO of a global payments company called Xoom, spelled XOOM.
Right.
And I joined well after the founders had started the company, but I helped scale the business. And that company had enormous financial success. It went public in 2013 and then later was acquired by PayPal for almost $1 billion.
Huh?
But the business that we were in was helping foreign-born immigrants get more of their money back to their families instead of in the pockets of Western Union, who was really the dominant player in that money transfer category. And so for me, that was the beginning of my world positive journey, because I found that the more positive impact we had on our customers, these hardworking immigrants, the more they told all their friends, and they lowered our customer acquisition cost and increased all the business metrics of our service at Xoom.
So there was actually a business value to doing moral work in that sense.
100%. And the mission and the purpose of the company helped me recruit amazing executives and helped me retain those executives. So I saw this causality between the authentic purpose and the positive impact that the service had, and I saw it improving the bottom line of the business and making more money for me and my investors. Mm-hmm. And so that simple idea that purpose drives profit, that companies can actually be formed to solve really, really big problems that our society, that our species faces, that was the idea that rolled the clock forward, that led me to join forces with Evan Williams, the founder of Blogger and Twitter, Vishal Vasish, the former chief strategy officer of Patagonia. The three of us came together with this shared belief that the biggest companies of our time are going to be companies that solve the world's biggest problems.
Right.
And we didn't see traditional venture capital investing in those companies.
Right. I mean, the traditional venture capital model is to take a whole mountain of cash, invest it in a startup, and that startup, the emphasis is on growth of that startup and not necessarily profitability. And the goal, of course, is an initial public offering where the venture capitalists, cash out. And in terms of the social consequences of the company, well, whatever, the venture capitalists have made a lot of money. So the idea of world positive investing really runs counter to the traditional, to what you're talking about with world positive. I'm sorry. World positive goes against the traditional VC model.
It's I'd say goes against is maybe too strong, but I think it's a new investment thesis that's different than the traditional venture model. And you said it well in terms of this idea of focus on growth, focus on a financial exit, an acquisition, an IPO. We are a returns focused fund, so we love the idea of having a financial exit. But our twist is that the kinds of companies we want to invest in, every dollar of revenue in that company also equates to some environmental or social benefit. So imagine if you are a company like Beyond Meat in our portfolio. They make plant-based alternatives to eating animal protein. They have a runaway product called the Beyond Burger. That's a runaway hit. Every Beyond Burger that they sell is reducing the amount of, animal burgers that are being sold. And the numbers are crystal clear that that's much, much better for the environment. Way less greenhouse gases, way less water usage, and improved human health outcomes in terms of the nutritional profile. So when you put all that together, you say, as that company grows revenue and profits, it's inherently having huge positive impact on the world. And so we see that as a flywheel that turns, that the more money Beyond Meat makes, the more impact it has. And that's the world positive idea for us.
Okay, so what might be a couple other examples of how a company can make a difference in that sense?
So one of our earliest investments was in a crazy mad scientist team building a company called Diamond Foundry. Mm-hmm. And the founders had a background in a technology called chemical vapor deposition from the semiconductor industry, laying down single atom materials, the way that Intel builds microprocessors. And they had the idea that they could actually apply that to laying down carbon atoms to actually grow flawless diamond. And they could grow diamond material in these plasma reactors that they were designing. And so this is a big market. It's a very profitable business for companies that sell diamonds today. But the way they're typically manufactured is through mining, which has horrible environmental damage. Right. In the African continent, it has well documented, child slavery and murder and just horrible negative externalities. Right. We bet on this team because they had a world positive idea to just reimagine that business and come up with a clean, abundant, scalable way to make this valuable resource, diamonds, to grow them instead of mine them.
Mm-hmm. And what about the healthcare company? I met the woman the other day. I think it's the founder the other night.
Incredible Health.
Yeah. What's going on with that?
That's Iman, the co-founder and CEO of Incredible Health, who you had the pleasure of meeting. And she's building a service to solve what we think is a huge systemic challenge in the United States, which is the nursing shortage. Right. Silicon Valley talks a lot about the software engineering shortage. There's so many venture-backed companies trying to build recruiting and employment matchmaking services for engineers. Well, it turns out the nursing shortage is 10 times bigger than the software engineering shortage. Right. And if you put your long-term thinking hat on and you think about our country and the world 10, 20, 30 years from now, we are all going to live significantly longer than the current models based on the progress we're making on reversing chronic disease. And, we think when you think long-term, the role of healthcare professionals, including nurses, is going to be probably the most important job and the largest employment category in our country. And today we can't train enough nurses and hospitals can't hire enough nurses. So Incredible Health was purpose-built to solve that problem. And their mission, their purpose is all about the nurse. They want her to find her highest, best purpose. And so they've come up with a very innovative way to match nurses to potential employers that can create the best career opportunities for them.
Do you think that world positive, funding in that way would actually catch on? I'm guessing there's a certain amount of your VC colleagues, who would look at you, maybe roll your eyes and thinking, well, it's a lovely idea. Maybe they do some good work, but it might not scale because, some really highly aggressive capitalistic ideas are going to scale better. Is this something that's going to grow, or is people going to look at it and go, well, it's a nice idea in a niche area?
Well, we're already seeing early signs that it's growing. I'm not ready to put the mission accomplished banner out yet, James, but we think when we prove that this thesis drives great financial returns, we will actually create a bunch of competitors and move more money into these categories of companies, these world positive companies. Some of the early signs that we're already seeing, one of our companies, Zymergen, which does biological manufacturing. They program single-celled bacteria and yeast to manufacture useful materials. For us, that's world positive because it's an alternative to petrochemical manufacturing. They're also generating enormous amounts of revenue doing this, and they raised, I believe it was $130 million in follow-on capital led by SoftBank. We recently invested in an all-electric vertical takeoff and landing air taxi, what is often called a flying car, using existing lithium-ion batteries. It's a company called Lilium. They raised $90 million with investment, not just from us, but from Tencent and from Atomico. So we're seeing examples of these kinds of companies that are actually getting significant access to capital and, more importantly, scaling real businesses and growing significant revenue. So I'm optimistic that we're going to get these proof points.
It's interesting. I wonder if you agree or disagree with this. There has been this sense, with American, technology growth, like there's this rough-hewn sense we're going to move first. I mean, Zuckerberg's model really was, move fast and break things. Go all the way back to, John D. Rockefeller. And it was like he was going to steamroll over anything. And to a certain extent, I'm wondering if that rough-hewn idea is actually productive in some ways. We may like it or dislike it, but it does create some wonderful things. And it's not as thoughtful as world positive investing. Is there still room for that? Or what's your take on that?
I mean, that's the dominant paradigm today. So I think it's
right.
taking up most of the room. We're trying to actually move capital, outside of just some of these big, essentially network effect, winner take all businesses. Some may call them monopolies, some may not. That's right. Above my pay grade to determine. But I think we are entering an era where we're seeing some unintended side effects from the growth at all costs technology development. And, we've, as a firm, we've written about this, and we've placed extra emphasis on values and values-based leadership, because we think we're starting to see the dark side of technology in terms of the influence that social media networks had on our recent presidential election. The rise in mental health issues that are coming from some of the engineered addiction in a lot of social media and mobile applications. So I don't think the entrepreneurs that built those things had intended for that, but I think they moved so fast that maybe they didn't step back to think about core values and maybe do the extra hard work to try to avoid those unintended negative consequences.
Mm-hmm. I mean, certainly, venture capital can go horribly wrong. I think about the example of Juicera, which I know you're familiar with. And it was a $600, $700 juice maker with an app, for God's sakes, and which I'm not sure the world really needs, a $600 juice maker. And it went bust eventually. But the odd thing is it got funded by some, heavy hitters. Google Ventures, Kleiner Perkins put money into it. And Juicera raised something like $100 million before it went bust. I mean, that's an awful lot of money. So what is it where venture capital goes horribly awry like that? What goes on in that kind of case?
It's a great question. I mean, I guess we get bragging rights to say that, we looked at that investment and chose not to invest.
Okay.
It's easy to have hindsight in 2020. I mean, right. On the one hand, the fact that a lot of venture capital was lost in that business is a good thing, because venture capital is a risk asset class, and it's how small businesses are funded. It's how jobs are created globally. So we don't want to have too much of a negative reaction, because we don't want venture capital to become so risk averse that we don't take crazy bets.
Right.
That said, I think Juicera is a cautionary tale in that that was a company trying to deliver elevated nutrition, organic, fruit and vegetable juices, which I think is a noble mission. But I think they were so focused on the technology of this hardware device that they missed the question that you open with, James, which is, do consumers really want that? And I think that, there are probably leaner, more efficient ways to test that hypothesis before building a factory and custom tooling and, a NASA level, budget for creating a new device.
Yeah. So that's a lot of good stuff. I love the philosophy. Just as a wrap up, I'd like to look at the future. Where do you see the future of world positive investing, or VC investing in general? If we have this discussion, 2-3 years from now, what are we going to be talking about in terms of venture capital funding?
That's a great question. Well, I wish I had a crystal ball, but I think 2 to 3 years out is probably easier than 20 years out. Right. 20 years out, the future of work and the future of currency are all, in question. But right. In 2 to 3 years, at least from my vantage point, from what we're focused on at Obvious Ventures, we think we're going to show great financial success stories around companies that are solving big problems and reimagining industries. And I think the trend that Mark Andreessen described as software eating the world right. is continuing. The notion of just building more enterprise software or building more internet software is much less interesting than taking technology and applying it to other markets. And I think in 3 years, you're going to see an order of magnitude more venture capital going into these frontier or edge technologies like computational biology, using technology to improve healthcare. Electric mobility, the flying cars we talked about, and that's an example of taking hardware and software and applying it to a huge industry called transportation. That's typically outside of traditional the traditional Silicon Valley lens. So I think you're going to see tech, for better and for worse, spread its wings and invade every huge industry on the planet: education, healthcare, food, transportation, and on down the stack.
No, I have no doubt the technology will spread its wings and invade every sector. I hope that's a good thing. There are moments when I worry about that, but I hope it's a good thing.
You and me both. I mean, we're trying to vote with our time and our money and try to deploy capital into the companies that are doing it well and that are purpose-driven and that are solving big problems.
Great. James, thank you very much for talking with us today. I will send you the link when we're done. We can all tweet about it. Thanks a lot.
Sounds great. I look forward to it. Thanks, James.